Go resume recording, and good morning, everybody. This is Thursday, September 17th, and we'll be going going until about quarter to 10 today. And the disclaimer, as we always do, is trading foreign exchange on margin carries a high level of risk and may not be suitable for all investors. The high degree of leverage can work against you as well as for you. Before deciding to invest in foreign exchange, you should carefully consider your investment objectives, level of experience, and risk appetite. The possibility exists that you could sustain a loss of some or all of your initial investment, and therefore you should not invest money that you cannot afford to lose. You should be aware of all the risks associated with the foreign exchange trading and seek advice from an independent financial advisor if you have any doubts. This is a live trading room for educational purposes only. No financial advice or recommendations will be provided. Any trade taken during this live session is not a recommendation or a suggestion that you should also do the same. Past performance is not indicative of future results. Do not trade money that you cannot afford to lose. And before trading live, always operate with a written trade plan that identifies the rules for entries, exits, targets, and risk management. And having said that, let's go to the charts. And we're going to make sure I got everything up and running the way it's supposed to be. And new share. Here's the chart. And we had an alert. We actually had two alerts on the US yen. And it's pretty much already hit the target. So, but we'll go through. This is a target area right here. Now, what I want to show everybody is that this was a little bit different. I'm starting to pay attention to the higher time frame trend lines, and I'm still looking for how we're going to be doing that. But here's what I found today: is that in order to find out where this down move may stop, you can see there's a lot of area between where the price is now to where it broke through all these little pivots here. Now this is a daily chart. Keep this in mind. There's absolutely nothing from the 105.08 level down to where it was, and I had to come from where the price was. I had to come all the way over here to be able to find any candles at all to see where the low is. I had to go to a daily chart. So this was a nice move down and it came back up, and that's where this whole move originated, right through here. So from a daily, so there's a lot of buyers in this area. In order to get a secondary, a bottom trend line, I had to go clear back over here to this area, which is back in March, to find out where. Here's the strong move up, came back down, retested it with this big wick down here. This is as low as it could go before, close as I could get to bringing it flat across. So this was the next major area. This was off a daily. So I started my trend line here. So here's my anchor. Here's my first hit. And then I didn't have another hit until just now. And it came right into this demand zone. And here's where it's challenging this trend line. So right now, at the end of today, since this is a daily chart, I'll note and see where this is. And I can see whether I'm going to move this over to validate my bottom trend line for my third hit, or if it's going to go down, and then I can adjust this accordingly. But I'm looking at this area, any place in this area right now, as long as it stays in this zone or it doesn't close anywhere below the zone, then I can validate this trend line as being, and then we're looking at this area up here on a daily chart for the upper level. If I'm looking for a trend line, I'm looking for another trend line up here. I'm going to look at that point. There's a hit right here. Here's a hit. And I could probably even take it to the body, the top of this red candle here. I could take it to that. This would be a supply zone from here to the top of the red candle. Make this a supply zone. And that's on a higher time frame. But now, so here's where it all started. a hit. So right now I'm looking at this area for really, if it reaches this trend line, I'm going to be looking to see where are all the wicks, where's the big red bodies, where are all the long extended range candles. And I'm going to take this big red candle, this is where it left, and it came back and was retested up here. So this is going to be another supply zone. So we're going to have, and you can have several of these different zones like this. I'm going to bring this down, slide this over, and that right there where this arrow is, I'm going to use this zone as a supply zone that if it comes back up and retests the upper part of this wedge, it's going to have some problem getting through this. Now, depending on how far down it goes before it tests that, we may be looking at this area as well. So I'll make a note of that. And that's only going to be if I'm looking for the zone above the wedge where this is going to be looking for a trap. I'd be looking for this as being a trap. Let me make this.
On the daily chart, Al.
Yep. Well, I'm just finding out ranges is what we're doing. We're just doing ranges here.
Okay.
Yeah. So anyway, that's how I'm looking at where the higher time frame playground is in here, and we're going to see. The reason why we started this, Matt, is because this is when we had the wedge alerts on the 15-minute.
Mm-hmm.
And so we had one at 6 o'clock, and we had a nice little alert. Now the question is, how far down is it going to go? And when I looked to see where the target area was, I had to go all the way to a daily chart to find out where the next level was below where we are now.
Oh, I get it. Okay.
And so this is a daily demand zone. And in order to do that, I had to come over on daily chart. I had to come all the way over here to this area because there's nothing in between here. All the way back to March, that's the anchor. Here's my hit. Here's my demand, the nearest demand zone I could come up with. And I'd put this off of a hourly chart. And you can see right now it's hitting, right? This is the third hit of this trend line. So when this thing comes down and hits that, it could be rejected. We could get a nice little bounce up to these other target areas.
Yeah, I see that too.
Okay. So we had the alert. This was at 6 o'clock. I drew the wedge. It broke. This trade's probably pretty much already done. You can see how it just touched right into this area. We had the alert. I drew the wedge. We had the break right here. Enter on the close below this blue line. It came down. It closed. Gave us an opportunity. And I did that off of a 1-minute chart. And so we had the alert. This was the first alert at 6 o'clock. And it broke the C. Let me see that we're by 5 minutes. Actually broke the D here. I was looking for a close below this point. This is a low point. I want to see it break. I want to get a lower price where the D was, and I want to see it close below this blue dotted line. Enter to close below. Here is my close below, and that's right before we got the second alert. So we got this. I entered the trade. It pulled back off the 1-minute chart. And so here's our 1-minute chart, and where's my close below? It's oh, here it is, way over here. It's what's that?
Yeah, I just a question.
Yes.
Because the alert at 6 was a descending wedge,
yes.
Right? Very first alert.
Yeah.
So you drew the descending main one as your wedge. Now the smaller like sub wedge that we've been doing can be either direction, or is it the opposing direction always?
It can be in either direction.
Okay. All right.
Yeah, it can be in either direction. All you're doing, looking at that, here is where the alert was. Mm-hmm. Now, in this particular case, I didn't even bother drawing the sub wedge because it already broke. Mm-hmm. But when actually this was at 6 o'clock. I never sat on the charts until almost 7 o'clock. Mm-hmm. So I was looking at this date. Now, if I were here at 6 o'clock, I would draw on another little area right in here where we got the alert. I would have taken this low. It was a descending, so I would start up here, come down here to this, tuck it in as close as I can, Here's the break. If I get a close below the D and everything else is showing to go short, I would take it here and then my target would have been, here would have been my target.
Mm-hmm. Okay.
Okay. Now, since I didn't get into the trade, and this is my reference. And so here's where I actually got into the trade. And it was right on this candle where we had a red, it closed below. I want to say it closed below both, especially I'm down this close. I want to say a close below this is the absolute low right on the D. So I want to see I want to see a wick below and a close below, somewhere in between this range, preferably. This would be aggressive, this would be a close below this one. So I got a close below both of this area, the blue where I want to get a close because that's where the D is. And here's where the trend line is. Here's the hit of the trend line. Came down, closed below it, came back up, retested where the D, the lowest part of the D, came back up in here, blue candle, turned red, and I'm in the trade. And then we were in the trade. This was only a couple pips, I believe, from here to down here. That was 6 pips. It was getting close. It came back up, retested the zone, and then we got the second alert. When I got the second alert, I did the same thing. Here's my smaller trend line. I'll put these back across together. I could probably take it up like that a little bit. Here's my high, here's my low, here's my lower high, here's the alert, here's the break. And then from this break right here, we were looking down for our target all the way down. Once it got down to here, we were out of it. As you can see now, it's coming back up. It retested the wedge. But here's the thing that we ought to look at. This is a daily demand zone. This is a daily trend line that it broke. Now I will readjust this trend line at the end of the day since I took this off of a daily chart. I'll wait and see where the low of this is for my third hit. And so now we're looking at this thing's possibly going to come up and retest the top of the, well, if it breaks through the bottom of the wedge, this wedge, and it goes back into the original wedge at 6 o'clock, then we can be looking at this area for a breakthrough to the top where it could go all the way up to this area. Because this is a low, this whole demand zone, this green area, this is an area that wasn't formed. It was formed back in March. No, actually, this one was a little earlier. If I go to my daily chart, you'll see this candle was formed in July 31st. This is the July close right here. Came all the way down, came back up. And here's where we are. This is where we are today. This is today's candle right here. Nice big move down, tagging the trend line. Now, right now, the fact that this thing started to pull, it just tagged the top of this zone. And right now, if it were to close right now today, at this point, I would move this. I would unlock this. I move this over, and then this is my third hit. And we also see that we have let's see if I can get this one to unlock. If I just slide this over just a little bit so you can see that we had the anchor, here's the hit. Now we're only talking a couple pips here. And we can just see where this thing's going to, now this thing could come down or could close. If it's anywhere in between, anywhere to where this arrow is, this is, you can see where it's breaking the trend line. Go back to my 15-minute chart. And, oops, I didn't want to unlock this. It's going to lock that one. So this purple line here is a very significant area right now. And that's how we have to pay attention. I think it's prudent to pay attention. We don't have to, but it's prudent to pay attention to the higher time frame zones. And I don't like going all the way to a daily if I don't have to. But in this case, that's the first place that's the only thing I could find to be able to get to where we are right now. Normally you can do it off an hourly.
It looks like we had a new alert, Al, on our favorite pair, UChef, descending.
Oh, yes,
Thanks,
there we go, 8:15. Let's take a look at that. Anyway, we don't have any more to talk about with the U.S. We can come back to that later, but let's go take a look at the U.S. Swiss. And this is the pair that got me doing what I just explained about these higher time frame trend lines. I'm just going to take this off, clean it all up, go to a 1 hour chart, see where do we have an area that this thing's been trading in the last week. Now I see that it's making some new highs over here, but this high hasn't been broken, this low hasn't been broken. So right now it's trading in between. I'm going to be looking at this little trend here. Here's a high, here's a lower high, here's a low, and this is pretty much, let's see if there's anything over here. You can see this has just been going flat straight across. So if you were to be looking at a wedge, and I'm not even sure this would be valid for a wedge particularly, but you can see it's going straight across. Nothing, it's staying within that range. Bring this thing down to here, take it on up to the top. And where does this thing flatten out? If you flatten this thing out right about here, you can see it's breaking, it broke this, but right now it's in this little area right here. So we're looking from this C to here. Now this is on a 1 hour chart, but if you can look at this, you can see, well, here's an anchor, here's a hit. Now the question is, well, if I move this over to this high right here, is this valid? And I would say this is valid. That's still pretty close. So we're looking to see find a wedge, and I want to see when I draw the wedge, it's probably going to form another little area between the purple line and a yellow line. And I want to see it close above whichever line ends up being the highest. I'm going to come over here to the 15-minute chart. We have the alert at, what time was it at?
8:15.
8:15?
Yes.
Okay, we're going to draw our alert. 8:15 is right here. There's 8:15. We're on a 15-minute chart. We have this right now. So we had this is the third hit right here where the arrow is. I try and bring the arrow so I know that, okay, now it's validated. Anything past that arrow, we know that this trend line is validated. And we had a strong move. So we have, here's the body, here's a hit, here's a hit. So this trend line right now this is where the alert was. We have a nice little wedge right in this area right here. Now, if we are okay with the fact that, let's see, let's take it to that one. And we can take this. Would you agree that this area is all, well, let's see how I'm going to do this. Let's take it to I'm going to keep this, I'm going to find this trend line here.
If you back up that C, wouldn't you have 3 hits?
Well, yeah, here's what I'm going to do. I'm going to take this, I'm going to draw a trend, my higher time frame trend. I'm going to start it with this one right here. And maybe I take it to, let me take this one off here for a second. Let's see, is there anything over here that I can use this for a hit is the question. Let me take these off. I'm going to come over here and see where I can come up with a higher time frame. This is an hour. I can use that for a hit. I can use this for here's a hit, here's a hit. I'm going to validate this line right here. So right now, this is the area that that I expect to see this thing trade in between this area, reference to the higher time frame. So where the alert was, we have 76 pips. That's a big area. Now all we need to do is try and find a place to get 7 pips, but we know that if it comes up to here now, we're going to be looking at taking it short. If it comes down here, we're going to be looking at taking it long. And now we're in between here. So let's put this in. So now we defined our range. I'm going to unlock this. And there's really no hurry for this because there's lots of room in between. It's probably going to give us some other options here. I'm going to take this to a 15-minute chart. We know where our zone is. I'm looking at, here's the alert. And it was, what was it, descending or ascending?
Yes, descending.
Descending. So here we have a nice little descending move here. And we have a big blue candle coming up. So right for this blue candle right here, I'm looking at there's probably some buyers down in here. And with this double, so the buyers and sellers are somewhere in between here and here. Let's draw our orange wedge.
And we're breaking out of the bottom of my wedge. Yeah.
Okay. All right. So here's the top. Here's our wedge. Yep. I can see that.
Yeah. And I'm taking it short.
Okay. And we have lots of the strength meter. Where's our strength meter on this? We have the
7 and 3.
The Swiss is strong to the downside by 3. So I'm going to see a close below this. I'm going to see a close below this C, and we have to respect the A right here. So let's mark these areas. Thanks for calling that out there, Matt, while I'm drawing this thing out. That helps while I'm trying to explain this, why I do it. If someone can be doing the same thing and just call it out when it's breaking out.
Yeah, no, for sure.
That was nice. That's a nice tag team there. Okay, so
yeah, man.
Here's the close.
What are you here for?
Yep. So here's the. I want to see a close. I want to see it close below this where the C is. I want to see it close. Okay, now here's what we have here. It came right down. It broke the wedge. It did not. It closed inside the yellow line and the blue line. It did close. Now it's pulling back. I'm going to be checking this A mark here. So I'm going to tweak this. I'm on a 1 minute chart now. Yep, I'm on a 1 minute chart. I'm going to mark this area because if it breaks that C, it could. I'm also going to be looking for a close below the A to go even lower yet. And once it breaks that, there's nothing. There's all clear space over here. So right now this is there, and you see it came down and it tagged where the A was, and I did not get a lower low, I did not get a close, but I did get the close here on the 1 minute between the yellow line. And so I'm going to make this one orange because that's our main. This is still our main wedge here.
Wo sind meine Bögen?
And we're going to make this a higher time frame. Oops. And so. Now, if this is our higher time frame, when we do now we have the inner wedge is right here. We have the moving average crossover, but right now you see where it broke here and it came out closed. Still respect now from here, from the two blue lines. If we took this trade right now where Matt said he took the trade, his target would have been right now until it breaks the A, or where the A mark is. We have 1 pip. That's it. That's all we get. But once it breaks, but now it's coming back up, retesting the moving averages, retesting the top of the wedge. If we get a break to the upside, then I'm going to be looking at a potential target of which is going to be way up here. But intermediately, I'm going to look and see where I want to see it close above the wick of where this last hit was.
I'm looking for a bounce off the top of the wedge right now for a potential second entry. So
okay,
they're smaller positions.
Yeah, these are now the range between where the alert was and to where the bottom of the wedge was. That's we have a 7 pip range inside the wedge. Now, if we can get a nice clean break, now you got an early entry, and you're still well within your risk tolerance. And our strength is to the downside, so we don't really want to be taken along with the 3-point spread on. And let's see, well, we have 3 points on the Swiss on the 15, the 5, and the 1. So I think this is a valid. This is valid here.
Excuse me, Al.
Yes, Christine.
Beach Panda had asked, there are some serious wicks typical of USD CHF lately, even on the hour or longer time frames. It looks like it's just going on the last 2 days. Anything fundamental we should make note of?
Nothing that I know about. I don't usually follow the fundamentals. The only thing I follow with the fundamentals is if there's a report on the Forex Factory report. But as far as why it's been so wicky lately, I really do not know.
Yeah, and I'm of that opinion as well. I've never put a lot of weight into fundamentals. I'm almost exclusively just technical analysis. I know people that do very well with fundamental analysis, and good for them. But there's I'll only look for red folders, FOMC, your whatever you call it, non-farm payroll, maybe governors speaking or stuff like that. But other than that, I don't put a lot of weight on that.
And my theory, to add to that, my theory is that by the time the charts will tell you what the fundamentals are before you get the report on the fundamentals. Because the people that know start making the moves as soon as they know it, and then the report comes out. And you can usually, oftentimes you can see where, a good example is even like on the US CAD yesterday, we had a news announcement at 10:30. Well, at about 10:25, the move already happened before the announcement ever came out, which means that the news was released to the news. The people that the big money got the word first, they took the position, and then the announcement came out, and then everybody jumped on to the announcement. But by the time the announcement actually happened, the move was already done, which tells me that they knew the answer to what was going to happen on the report before it ever it showed up on the charts, before it ever hit the news. And that's been my theory all along, is that the charts reflect what the fundamentals are going to be, as opposed to the fundamentals causing the charts at the time of the reports. The charts will usually tell you ahead of time what's going to happen with the news. They're not supposed to know what to do, but somehow they always seem to manage to figure that out.
Al, your first chart is on a 5 instead of a 15.
Thank you, Christine.
You're welcome.
5, 15. So yeah, here's the 15. Yeah, and you're right, Beach Pan. It's pretty wicky in there. There's a lot of wicks, and so I've gotten whipsawed a lot with this pair lately. So I'm just kind of staying away from it for right now until I can start drawing. I mean, I'll take these in my demo, and if I can start consistently getting profitable with the breakouts, with the way that wedges are drawn, then they'll start taking it. But right now, I'll take this trade. If it breaks out the top side, I'll take it. If I get a close, see if I can find my enter on. I think I'm running out of. I need to clean this up a little bit here because I can't find the one I'm looking for. Just where I made it. Well, let's see. Oh, that was the other chart that we had. Okay. Anyway, if we get a close, let's see if I can draw it out here. Put it on. Nope, that's not it. I was hoping I had my paste still in there, but so it's going to be enter on close. In this case, it's going to be close above. So I want to see it break the wedge, break this wick, and if I can get a close in between where the wedge and I want to see a higher high and a higher close is what I'm looking for, based on what we have over here. So we have this is the highest close we have right here, is where this way. If this thing breaks out, if I can get a close above the trend, or where's my A? Actually, I can move this. All right, now here's where I can move this thing over, because here's a hit. That's a lower high. Oops, I mean that one there. So right now we have two areas. One, this could be a target, or it could be a target, or it could be, if it breaks and closes above this, then we can go up even higher. Yeah, that might give us the extra run. But right now we have a zone between, from that D to where the potential break is. That's our 6 pips. So if we get a break of the wedge, I like to see a higher high. I mean, this was a high, here's a lower high. So this is still a lower high than over here. And so I want to see a wick. I'd like to see a wick above here and a close inside of this area or higher. Now we have the 5 minute 62 is sitting right here. My guess is what's going to happen is it's going to come up, tag the 62. I'm going to mark that. Here's our 5-minute 62. Let's see where our 15-minute 62 is. Is that going in the right direction? See, right now we're showing where we have the 62, the 13, and the 5 is all the way down here. So right now this thing's still saying it's going to go short. This thing is still saying it's going to go short. We have the 62, the 13, and the 5. Now 5 and 13 are about ready to try and cross. It's going to come up here and tag this, and it'll probably get a bounce. I would expect it's going to come up, bounce off of that. We may get a close in here, but I also have to respect that this is a 62. Then I want to see these moving averages be in the right direction for whatever direction I take it. But right now, I would like to see this thing give me some confirmation that that the 62 here is going to be broken. Ideally, I'd like to see it close above the 62, wait for a pullback, and then maybe try and enter the trade.
Okay, Beach Panda has a follow-up to what he had said before. I realize that big money always hears this first. It's the history of the activity which I was asking if there was or is a fundamental story that applies to technical analysis.
Yeah, if there is, I don't know what the story would be. I really don't. The only thing I could say to that is that the currencies, the dollar has been so volatile, and the Swiss is generally a fairly stable currency. That with the volatility of the U.S. dollar is one reason why the Swiss is aiming to be so wicky, because that's the only thing I can think of is it's really reflecting the volatility of the dollar more so than the volatility of the Swiss. That's only my opinion. They just came up, here a minute, came up, tag the trend line. The trend line is valid. And we'll just have to wait and see what it does. Right now, it's not giving us any reason to get in. Now, if we do have, this is strong to the downside. If we can get a flip of the moving averages all in the correct direction here, it may come up and give us that flip, even if it's up here. That might give us the ability to come down and take the trade if we have the range to the downside. But right now, when you have a 7-pip range inside the whole wedge, if it breaks, we probably have a 6-pip range from the break of the wedge, and that would depend on what kind of a fill you could get from here to here. That's only 3 pips. So even if you get the break of the wedge and the close, you've got 3 pips to a target, or maybe 2 or less to the target. I would view this more of a trap in the area right now because of the 62 sitting up here. So I would be viewing this as a trap. And I'm going to take it from here to here.
My upper trend line's a little bit different than yours.
Is it? Okay.
Yeah, mine is too.
Is it? Okay. Well, let me see.
Yeah, it's off a little bit.
Okay. Let's. You guys can share.
Mine's.
Go ahead. I'll stop sharing once you share yours, Matt. When you're ready. Until you're ready, I'll go back.
I can't share.
Oh, okay.
While you're sharing, let me see.
I'll tell you what. No, I should have stopped sharing. I think I stopped sharing. Did I?
Oh, maybe you have to turn on allow multiple participants again.
No, you're good now.
You should be able to share.
No,
now.
I got it. You guys see my screen?
Yep.
Okay. So this is where I put mine. Boom, boom, boom. And then it missed here and it missed here. I think Al put his right here because he was hitting the top here, which, hey, listen, it's like 1.5 pips. Big deal.
Yeah.
The reason I put I drew 2 lines. Let's get rid of that. It's a 1-minute chart. So I went from here to here. It breached, and then I have one down here, here, and here. But I never went down and connected it here yet. So a person can keep on drawing lines as long as you don't start getting confused, right? There's no, like, anytime you have lows or highs, just put a line on it. After a while, you get really used to them, and you can kind of decipher. See, this is going to be a bigger wedge. It's still a 1 minute chart though, so there's not a lot of movement here, but like I said, I was looking for a bounce off here, and then maybe I'll take the last half of my position down. So I do believe this is the rejection here that we were looking for.
Yep, and it came right up into my trap area.
Yeah, that's that. So it's interesting. Your trap area is between the two wedges that we draw.
Yep,
that
exactly.
we've drawn, and it's not a big deal. Like
Yep.
it's 2 pips. It's your spread. Big deal.
Yeah.
And
that's just because a lot of these wedges, it's still relative. It's somewhat subjective to which ones you want to use for your highs, your lows, or your hits. How much of a hit you're willing to take. So, I mean, it can vary. Now, the further out you go from where you draw a line, it's going to reflect it a lot greater as you further you go out. But when you're close in, within a couple of minutes, or within 15 minutes or so, you're not going to see that much of a variation.
No, you're not going to see very much at all. It's just I'm more of a stickler for lines, so I try to make it. I don't mind putting a lot of lines on my charts because I'm so used to it that it doesn't phase me at this point. So I'd like to see it come down, tag here again. Then I would take the profit from this trade, just have a little piece of it, and then maybe look for getting out with maybe a tiny little bit of profit on this one. So, but we'll see. You see how it broke this lower low? That's pretty good for me. I like that it made a new low, and here it stayed as a lower high. So we'll see what happens with this little candle here. Anyway, that's pretty much what I was doing, Al. If you want to take over.
Okay. All right. Let me. Thanks for that, Matt.
Yeah.
I'll go back to my chart here. Okay. So here's where we are right now. I drew my little trap up in here. Everybody see it? Everything okay? Hopefully. It came up, whipped right into that area, rejected, came back into the wedge. So right now there's nothing to do. As this has happened, you can see where, let me just bring this down a little bit. You can see where this 62 is now getting lower. Put this back up here. So right now I'm looking at the 62. I'm looking at this area right here holding. We still have the strength to the downside with the Swiss being the stronger of the Swiss is strong by 4. Swiss is the second currency of the pair. So we're looking to, if the Swiss is strong, it's going to be, we're looking for a short. So I'm still looking for that break to the downside. And we just have to, now if we have, here's where the alert was. Let's get on our 5 minute. Let's see, let me get this blown up here. I can slide this thing over. We're a little bit, never did quite finish this part. Here's the alert. I'm on a 1 minute chart now. I'm going to try and tweak these as close as I can. So we have the anchor. Here's a hit. Here's the third hit. Now it validates the trend line. Came back up. The trend line is validated. Came up, wicked into our trap area. I was looking at this being pretty much this area right here where it kind of breaks the wedge, but needs to, if it starts getting, it almost needs to break this trap. Now we're coming down, and here's where we had the enter to enter on the close. From the 1 minute chart, as we tweak this tight, you can see this candle right here, we never did get the close, but we got the wick below the C. We never got the close below the C. This is the pullback. Now we're going to see if this can break. If this can break, we have to find out where are we going to go where's our target? We have a couple of different ways we can do that. We can just put a Fibonacci target in here and say this is going to be a zone right here. This is a, this should be the 2 minute, yeah, this is the 2 minute, okay. So here's our blue line up here. Here's our 2 minute red line. And if we go to our 5 minute chart and see where our 5 minute Fibonacci is, we're going to see, find it, where is it? Make sure we have it on a 5 minute. Yep, we do. Oh, right here, here's the blue line. And so the next Fibonacci target is going to be down here. And is there anything stopping us as we look in this chart here, as we look over to the left, is there anything over here to the left that's going to stop us from hitting this target if it breaks? And we're going to be looking at, this is a 5 minute red. 5 minute red, right there. Come on over here and see what we have over on this side. Here's a nice big wick, big blue candle. Here's our red Fibonacci. And we've had some wicks right over in here. So we're going to come over here and we're going to draw where these wicks are. Take it down to here. Come back over. Slide it on across.
Al, that fib says 5 minute green.
Oh, yeah.
Yeah. Oh, no problem. I just.
Yeah, no, I thought I fixed that yesterday. Doggone it. I thought, yeah, I noticed that yesterday. I thought, oh, wait, that's the wrong color and everything else. It's, but yeah, let me see. I have another one here.
Not to be a stickler.
Yeah, no, we need to be sticklers here.
Yeah, right below. Go down.
There we go. There's my 5 minute red. There we go. So anyway, if this thing breaks, this is the area we're looking at. There's nothing much in between. So this could be a really nice trade, actually. I'm a little hesitant to take the Swiss, but I may just have to do so because this is setting up really nice. So we're going to be looking at my broker setup here.
If you're hesitant.
Well, the only reason I'd be hesitant, not because of the price action.
I don't know, man.
Not because of the price action, but because of my experience with it. My experience with it. I think right now the setup looks perfect.
Oh, yeah, you got burned too many times.
Yeah, that's my hesitation. But I'm looking at things a little differently than that. So I'm going to be looking at a sell stop somewhere in this zone. If we can get a sell, I'll be looking right now. I'm going to be looking at if I can get a close below the 90, 99. So I'm going to take profit, stop loss, sell, stop. Okay, now, okay, just got filled. Even though it didn't hit it, I'm filled right now. This 5 minute candle hasn't closed. Let's go to our 1 minute chart.
So we got the 15-minute candle that's going to close in the next 32 seconds. So
okay, so that'll be significant. And if that closes, we might get a little bit of a pullback on the 15-minute when it first opens up, a little bit of pullback, and then it should drop off. Oftentimes when the candle closes, you'll get a reverse action off that candle. So that would not surprise me. We're back on our 1 minute chart. We did not get the close below the blue line. Now I was a little bit, now what I did, I wanted to get filled in this area and the spread got me in. You can see I got filled, but the price never got down because the spread took me. What it did was it says, okay, yeah, there's a buyer down here. I'll just, this seller just says, okay, I'm going to take that. But the price never got there. So we have a wick. Again, we had a hit, a hit, a hit. No close below that blue line. So right now is finding that this is telling me that this is somewhat of a demand zone here, that if we start getting the switchover of the strength. Now right now here is still showing that the Swiss is still strong even though it's pulling back. That's a good sign. All of our moving averages are correct here. We had it came up, challenged our 5 minute 62. The 15-minute 62 was way up above. It was pretty much right where it's at 91.10. The 15 and the 5.62s are all right at the same spot. And so we just have to, right now, everything's still in our favor for this thing to go short. Now, if we get another close below here, I might just do another market entry to get a second position. Once I get this one validated. This one still hasn't, this was projected. This was not, I did not get the close. Now we may get it right now. We finally got a lower candle in. If we can get this 1 minute candle to close, I can try and I'll have to take a smaller position here just because TradingView won't let me do it. If I get the close here, I'm gonna go with a sell market. I wanted to be filled inside these two areas. We're still only looking at 1 or 2 pips right now.
You remember how I had 2?
Yep.
So right where it just broke is the
we have 4 more seconds.
Bottom of that second trend line. So
yep, here's the candle. Should be closing right about now, and I'm in. I'm taking a second position. You can see where I got filled. So I got filled at first one was at 9100, and this one was 2 pips below. So right now I have 2 positions. And my target's going to be down here by the, I believe we were looking at a fib line is what we were looking at. Now, can we get our 7 pips? That's the question. So here's our fill. Let's put our targets in, long, short. And let's say we got filled here. We have our 7 pip. Here's our 7 pips. And I'm going to let one run. Let's see what happens. All of our moving averages are correct. We have 2 positions on. Still showing a short.
Yeah, a lot of strength on the Swiss.
Yeah, a lot of strength on the Swiss right now.
yeah, it got really strong. So we'll see what happens.
I like this trade. All moving averages are good. We just came down.
Yeah, it could be nice.
Tagged the 11, came up. Got another hook at outside the 60-40 zone, which is good. Have a little bit of a drop. It's spacing a little bit. And we have our next Fibonacci target is all the way down here. If we put a, put the 2 minute on. And 2 minute Fibonacci is right here where my first target is. Actually, it's right up here. This is the hit. Again, this one, this right here is where, and that's after about 3.5 pips or so. I like this blue zone down here. Again, we're just trying to get 7 pips out of this thing.
And here we go.
We're off to the races.
Now that we're in this trade, we can probably maybe keep our heads a little bit clearer so we don't have to get so emotional about this thing and put it on a 5 minute chart. And we're going to follow this, we're going to look for our target, and we're going to watch the price action on the 5 minute chart and give us some idea what we're doing. Our 62, let's see, I can take this one, just put it over here for right now. Get this one, move this one down a little bit. Now my stop is going to be somewhere up above. I want to see my stop being above this strong move down. If it comes back, if this thing comes all the way down, it comes back and takes this, close above this, where this red candle, the top of this red candle, I'm going to be looking at getting out of this trade.
I don't think it will for a little bit.
I would like to think it won't. But this would be another little trap area if it comes up. And right now, everything's looking good for this. If we have the close below the C area, we have to close. We have the wick below, and right now, if this candle closes, it'll close below the A. And if it can close below the A, then we should be off to the races. Right now, this trend line is still valid. We have a break of the trend line, so the break of the trend line in one direction gives us the support in the other direction. And you can see where this D, we have a hit. Let me just move this out of the way a little bit. We can take a trend line from the B to the D, and we can do the higher time frame. We can just follow this one. Now we have, there's a hit, here's a hit. This thing's just following right along in here. A little bit of validation right here where we got the arrow. This trend line is valid. So now if it comes up and breaks through this trend line, you'll be seeing this can be right at pretty much, in order to break this purple trend line, it's going to be testing this area right up in here where I have this little red box. Until then, the yellow moving averages are, oh crap, let's get out stop if it closes above that. If it's going to be a strong move down, this thing should hold for a while. We still didn't get the close below the A. Got the wick below, we didn't get the close below.
So here's going to be our pullback. We're going to see what.
And here's going to be our visual stop right through here. If it closes above this area right here, I'll be looking at getting out if it breaks the top of this. I'm just looking at the price action if it gets above this wick right here. Here's the blue candle. This blue candle right here was broken off of this down move. And right now this area should hold. It could come up and retest this area. If it doesn't hold, then something's wrong. Getting back, testing the bottom of the wedge.
It'll hold. And as I say that, everything blows through the top.
Well, like I said, I stopped making predictions as far as where it's going to go. I just try and keep my mind as clear as I can without putting any of my own opinions in, because sometimes it works, sometimes it doesn't. We'll just let the charts tell us what to do. And know that if this happens, this is what we're going to do. If that happens, we're going to do that.
Yeah, you're totally right.
Basically, what I'm looking for is that if this move is going to work out, it should work out within a I would say within 30 minutes it should work out. If it doesn't, there's something else going on. Either there's a news announcement coming out that we're not aware of, or but if it just goes, it stays in a really tight range. It doesn't. If it doesn't break out within a reasonable period of time, and I'm saying within 30 minutes to an hour is what I'm going to give, especially this pair, because I find out that the basing, like from here, if you look at the basing from this candle to where it is right now, we're looking at 20 bars, 25-minute bars. There's our 60 minutes, or that's 100 minutes. That's an hour and a half. So we had to break. So I would say within 30 minutes, this thing should be breaking on down. And most of our really good trades we're in and out within 30 minutes.
Well, on 1 minute, it keeps making lower lows and lower highs.
And that's a good thing. Yep,
that's a good thing.
That's a good thing. Yep. Let's see, we're on a 5 minute. Actually doing the same thing on the 5 minute too. So we'll see. We'll see if it, but right now it obviously has some buyers right in this area. We haven't got the break below. We haven't got the close below the A. We have the break. All it's doing is picking up some more. But now, do we have divergence? We maybe want to take a look at that. Do we have divergence on here? Here's the low. Here's a low. Here's a lower low with a higher low. Yes, we do have divergence. So we need to pay attention to that. So we have this low right here to this low. Actually, I have one that says divergence here. Right there. There's our divergence. And then from here to here, again, we have some divergence. So that's going to be from this point to here. It's not a lot, but a slight little up. So basically, this could be the trap. This could be the trap to the downside. And we have another trap up here. Right now we're still okay so far. It hasn't come up and entered my visual stop zone. So the top of this candle is still valid. The wedge is still valid. And it's pushing back down. And we still have the strength of the Swiss on the 5 minutes. So that's still good. As long as this RCS tool can keep us on a nice little spread on the 5 minute, I'm still okay staying in this trade on the pullback. I would like to see a close below this area. We had 3 1-minute blue candles straight up, and then we had a little basing, came back up, tagged the 62, and we have a 1 strong rejection. That's helpful. But we are right now. I would like to see that divergence kind of go away here a little bit.
Yeah, my internet connection's jacked.
Okay,
And
1
he
minute.
said, feels like deja vu from the other day.
Well, so this is a pair that has doesn't like to play very nicely. It's been very wicky. Even like what Beach Panda was saying about how wicky this pair was. Technically, I think this is a great trade. Emotionally, my mind is saying, be careful. And right now, we're still profitable in our first position where we
I'll let
first
you
got
know in
in.
another minute or so. Yeah, might be pulling out of this trade if it doesn't break.
You broke up there, Matt.
Maybe 3 minutes or so.
You had said you
Yeah,
might.
I know my internet's
Oh,
really
sorry.
bad.
Oh, no, that's okay. I just want to make sure we didn't miss anything really important that you said.
No, my.
Yeah, you are breaking up there, Matt.
He broke.
Yeah.
Our holes are negative, but our RCSs have switched.
On the 1 minute, yeah, that will happen on the, but I mean, that's not unusual on the 1 minute. But you certainly don't want to be seeing it too much on right now we're getting closer on the 5. The thing I don't like about this trade right now is the fact this area has been rejected twice or 3 times.
The A line.
Where we got in. Well, 2 things I don't like about this right now is that we had the break, got the close. We still need to clear this area. Now there wasn't much. There's only like 3 pip target on that, and we got a lower. We have a lower price. We barely got a lower close. Actually, we barely got a lower close, and that was rejecting back up again. We have divergence, and that part I don't like the fact we have the divergence on this.
Matt said, sorry.
Yeah, so that's basically where we are right now. We just have to, see if it's
Yeah,
if
Matt
this could.
says, my internet is really messed up bad. I'm probably going to pull out of this trade. And then he subsequently said, the next time it comes down, I'll be leaving it.
Yeah, right now, if you have 2 choices of this, you could bail on it and wait for a better confirmation, or you can just hang on to it until we get the break above. If we get the break above these 2, the orange and the purple area, if we get a break and close above that, you may want to just bail on this trade. Right now, the moving average, the 5-minute moving average on the 13 is still in play. It's still respecting that. But on the 1 minute, if we get a flip on the 1 minute, so right now you're seeing on the 1 minute, all these prices are starting to consolidate. And a lot of times I'll use this as a gauge. If we get the crossover of the yellow and green on the 1 minute, and we get a close above the 62, which basically is going to be this point, right? This candle right here. This is where it got rejected. And what I could see happening, this blue candle came up, got everybody in, come back in, take out the stops, and then come back in and start making its way up to the upside. And we're starting to see how everything's starting to consolidate in here. These are getting tighter and tighter and tighter. The spread between the white and the all these things, they're starting to consolidate right in this area. Now it hasn't really, from this point to this point, you can almost even look at a inner wedge and see there's breaking it. And I'm going to bail on these trades. Let's see, where's our 562 right now? Expecting that. And we have our 13 is all, and our 15 minutes 62 is all right here at the same spot. Let's see what it looks like without all this stuff on this 15-minute chart. A lot of wicks. You can just see all the wicks in this thing. Let's draw a higher time. Let's check out our higher time frame trend here. Here's the highest one up here. This one's still being respected to the downside. Our moving averages are still being respected. Let's see, we pulled that trade, so I'm going to take this off. Now we're looking at the 15-minute chart and seeing, now we have, if you can look and see where all these wicks are, here's a wick, 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 comes into bite, came up. So basically, you've got some more, lots of wicks above in here. So this area right here is an area that will probably, there's a body, if it can break through the top of this, it's probably going to come on up to this area. Make this a target. And there's not much else to say about this thing until it decides to do something here. But right now, you can see all these wicks. It's very wicky, and just the fact we had this divergence and we couldn't get the close below there, that told me this thing may not materialize. It still might, but I didn't like it wasn't fitting the pattern that we were wanting to. Like I said, once you get into the trade, if it can't materialize within 30 minutes or an hour at the tops, I would say, then you probably want to, it's not performing the way the plan was. The plan was to come in here, break, pull back, and then take off. But right now, when you get basically on the 5-minute chart, we got in on this red candle, and it's been rejected. So this is 5 minutes, so 5, 10, 15, 20, 25 minutes with a pullback. Now, that doesn't mean it still can't come back and retest it. We still don't have a close above this red candle. So we're still making a high, lower high, lower high, lower high. Now, this candle right here is lower high, pretty much an equal high right in this area. But this is a candle that we need to, if it's going to break these moving averages, it's got to get a close above this blue line where they entered to close.
Beach Panda says it's, oh, wait a second, sorry. I gotta lower it a little. Seems that the USD CHF does not like the principles behind AIRIS, LOL.
Yeah, I agree. Well, yeah, I tend to agree with that, quite frankly. But I mean, it did get us in here. There is an argument to be made. I mean, this red candle was basically, well, it came right down and just closed right there. Made a little bit of a further wick. Yeah, this was just. I don't know what to say about it, other than the fact, yeah, I agree. It doesn't like our principles. That's probably true. That's probably the best
I'm
way
happy. I'm
probably the
happy
best
I
way to put it.
exited.
Yeah. It still could work, but right now it's trading inside of the zone. And I don't know, let's see, let's go to a higher time frame and just see where we can find a bottom trend line to see if that will help to fit the picture here a little bit. So I'm going to go to my 15-minute chart. We have...
Beach Panda also said, thanks, Al, for keeping us on track with the dollar Swiss. Just added a 30-minute exit/close trade to my rules.
Oh, I think that's a good rule to put in. I had an instructor once that said if he had 6 candles and it didn't do what he wanted to do, he was out of the trade after 6 candles. That would be about the 6 candles on a 30-minute chart. That's just about exactly what that is. And that was one of his rules, was if it doesn't do what I want to do within 6 candles of basing, I'm out of it. And I think that's a now we have this. All right, where'd this one come from? Let's take a look and see where we brought that one in.
Those are from
that was off of that one. If we take this, I do like this zone in here for a target, and I keep thinking it's going to break, but it's not going to break. Doesn't seem like it's going to break anytime soon here. Here's our 1-minute chart. We had a strong move up. Here's our red candle down and then push that. So right in this area right here, I would be looking off of a 1-minute chart. It would need to close below that in order to, and if we're looking at a zone, a demand zone, we're pretty much right in that demand zone. This is at the bottom of that zone. I kind of like this. Pay attention to this big wick here. This is probably a news announcement. This is probably a demand zone. This would be a good area for a target for demand. And this is off of a 1-hour chart. Let's go with and that's about as We had a nice move up, came back, tested it. So right here is I like that one. Yeah, that's pretty much the top of that zone. It came, let's see how close it came to our price on that one. Use this for the top. Let's go back to our 15-minute chart. And we had divergence right before the demand zone. That doesn't mean it won't come back in and tag it, but it certainly is something to pay attention to. I'm gonna move this, see if I can find a.
Yeah, Al. I'm of the same opinion because I was following the same guy that was talking about 6 candles. Yeah, don't. If it doesn't do what it's supposed to do in the next little bit, then you know what? Pull the trigger, pull the zip line, and get out because it just didn't pan out.
Yeah.
And that trade for me, well, I ended up with no loss.
Oh, you just lost you again there, Matt.
Hopefully, no one took any significant loss on that.
I kind of like this for a trend line.
It
right
is what
here.
it is. And
like,
USD CHF right now is not playing nice.
Yeah, I kind of like this for a trend line. Using this bottom here, here's a hit. We have our demand zone, and if I don't have anything over in this area, what I'll do is I'll look and see where is this thing coming to cross over with the top of the. And so right now you've got this little zone right in here, which is where it was rejected. If it came back down, it could probably come down and retest this. But this is kind of the test right here. And if I were to pull this one up here to this low for right now, you can see where we have the anchor. There's a hit. How much of it spread is that on this 15-minute chart? There's a 109. Let's see. That's at 90.66. The bottom of that is at 90.64. This is 2-pip hit. And so that validates, I would say that's a valid hit. And right now we have the low that's been rejected. So I'm going to say that this area right here is good for my third hit. And that identifies, now we have the third hit here. I'm trying to put these, when I have this trend line, I have the arrow. I try to put the arrow where the third hit is, or where I project the third hit to be. And so let me go back over here to, that's just so you know how I'm charting this thing. I just started adding this. So here's the anchor, here's the hit, here's the third hit, validates the trend line. Here's the, let's see, was this the, now how did, this was the valid anchor, hit. Okay, let's move this back over here. Let's tighten this thing up a little bit. Or do I have another one? Nope. Unlock this. So we have, here's the anchor. Now this was back in September 10th. That was last week. Here's the hit. Here's our third hit. We have a low, a higher low, a higher low. There's our third hit, okay? There's our trend line. Let's go back to our 15-minute chart. And everything is now in play again. See how I did that? We have a demand zone. We came in here where the trend line and the demand zone kind of meet, which is right here where the alert was. And we had the divergence. This thing could very well go up to this area right in here.
Now, Al.
Yes.
2 things. One, I'll read Beach Pandas, and then I have my own question.
Okay.
Matt was able to collect 4 pips off of the U.S. Swiss, but this alert was a lot of work. Now, if you were not in the trade to go down, if we go back using your drawings, and if we go to the 1-minute chart.
Okay, let's do that. Okay, there's our 1 minute
Now,
chart.
okay, you see how we had our wedge, right?
Yep.
And then we had a point where we had a close above your wedge on the right.
Over
Yeah,
here.
in that
Yep.
area, right?
Yep.
So, because if you keep on flip flopping all day, I mean, forget it. You'll chew things
Well,
up. If you're not in that yet.
Well, this point closed above. See where I drew the circle?
Mm-hmm. Yes.
That was after it got rejected.
Yes.
Okay, that was after we got rejected. We had and I drew this because I was looking at the flip of the moving averages. Now you can see where we had the flip over here for the green and the yellow.
Right.
But we're waiting for the close above the white. So and we had the close above the white. Here was where it broke the wedge.
Yes.
Okay, the top of the wedge.
Right.
Because this was the original wedge, the orange one. That was the original one. Had the break, got rejected, came back up. Now took the top of the wedge out, and now we're looking to see. Okay, well now we have another zone up here. Now the question is, if we got this break where we had the close above the moving averages, got the break above and close above the wedge. Now the question is, do we want to take that trade?
How much room did we have there?
And so the question, which I think is a really valid question. Now, my question is like, well, do I want to take this trade? So here's this was the last hit that the trend line was challenged. So I want to see it close above here.
Oh, okay, I was going
for one. Well, let's see here. Let me think. Because this is well, let me rephrase this. When this thing broke and closed above this point, here's a lower, here's a high, lower high, lower high. This lower high now got broken. So I want to see a close above this, but I also want to see a close above the wedge. Because the wedge is still. So now it's making new highs. Now this candle right here is still kind of in play because this is the last one this was the last red candle before it was rejected. This closed above. Here's a rejection. Now it's going up. Now the question is, if you took this long in here, you had two choices. You could say, I've got all my moving averages are in the right direction, green, yellow, white. We had the close above the white. We got the close above the wedge. This one would be aggressive because you don't have the close in this area yet, but you do have the close above. It's changing the direction from here. Now the question is, how much room do we have to the upside before our moving averages? Is there enough room to take this trade? And I'm going to think probably not. So let's just say best case scenario, you got in on this blue candle right here. You're looking at 3 pips. Before you know you're going to probably have a rejection. Before you know you're coming into a supply zone. I don't want to take that trade. There's not enough room to the upside.
Yeah. Okay.
Okay. Yeah. And
I don't like leaving your charts to go over and measure out by me. So I like to stay and watch what you're doing.
Yeah.
So
there's two things that validate. Now the question is, how early do you want to get in when you don't know which direction it's going? We had our major wedge. Now when it came down and made a lower high, here's another secondary wedge. If you look at this, you have a pivot high. Oops. You have a pivot high. You have a pivot low. You have a lower high. You have a higher low. And we're going to make this a different color just for illustration purposes. But let's make this one white. And so now we had the close above this one, well, this candle, but this one's still in play. So here, when you really look at it, you have this little zone right here, which is pretty much where I drew this, where you have a decision to make. You want to have a close, you want a candle that higher than the C, because that'll give you a new high.
Right.
You also want to have it close outside the wedge. So best case scenario, you could have gotten in on this close above, the wick above and the close above the C. That would be aggressive because this one's still in play. But now once you got this thing closed here, you probably still would have been filled up here if you just took it on that close. and you still would only have 3 pips. And now you're going to get whipsawed again.
Right.
And that's why I don't like this pair, because this does this all the time. It breaks the wedge, comes up right to an area where it can't, because it's trading in a relatively narrow range on the moves, the breakout moves. And when you get the breakout, all it's doing is coming into the next area.
Right.
And we're not getting our 7 pips on the moves. And that's why I don't like this pair. It gives you alert. You can get 2 or 3 pips, but till you get done paying the spread, until you get done, getting in just the right entry on it, you're risking an awful lot for a little bit. The risk reward isn't there.
Mm-hmm.
Now, until this pair starts changing its dynamics, that's what you have to kind of expect with this. Now, the other argument would be is that if you wanted to do, you could just say, well, I'm just going to trade from wedge to wedge, but maybe wait for the higher time frame. Now, so right now, if this thing comes on up, and where is that? If it comes up into this area, I may be looking to see of an area to possibly on a higher time frame. Let's go to let's see where our supply zone is on the upside. Let's go over here to our 15-minute chart. And let's come over here and see where was here's where the wedge. So right now, this is the last hit to validate the trend, okay?
Mm-hmm.
So I'm going to be looking at, just like we did down here, to see, okay, where is my demand zone? I'm going to say, where's my supply zone? And I'm going to say it's going to be somewhere right up in this wick right here, right at the wedge. So right now, if this thing comes up, by the time it comes up to, we tested this. Now I'm going to be thinking that by the time it tests, we're going to be over here at this area right in here. I'd be willing to wager that this is the area that I'm going to be looking at to take it short.
Mm-hmm. Okay.
Okay, so we're going to just mark that right like that and see how this plays out. Let's take this, and again, this is going to be a supply zone / a trap. Okay, let's just see. And right now we have it right here because this is still a valid trend line. If you draw the bigger, if you take this from this point where it was rejected to this point, just let's see, where's my trend? We take it from trend line, major trend line to trend line. We got the alert. Tuck it in. So take it there. I could use this as a area. Anchor, hit. Here's my trend line. Anchor, hit. Here was the alert. Came back up and it broke, but it couldn't break below here.
Right. Couldn't close.
So right now it's still respecting this. It's still respecting this one right here as well.
Right.
So I could take this over here to this one. Here's a anchor. This is a little bit more of a hit, so I mean I'd probably be more apt to take it like this to validate this trend, the white line.
Right. All right. Beach Panda has another thing.
I'm glad Beach Panda. I'm glad you have so many questions. That makes me feel good. That means you're listening, pay attention, and you're trying to work this out. So what's your question?
I'm confused. Wicks aside, I thought I remembered that one of the moderators entered a position last month when a huge engulfing candle closed, which had broken a wedge, even though it wasn't a series of candles. Is that no longer a reasonable validation for entering?
I don't generally, I mean, I look at these engulfing candles as something to take note of. I wouldn't consider that to be part of the system that we're talking with the Hawkeye system, if that helps. It's something, I think engulfing candles are important to note. It's not really part of the system. This gives me an idea of a price action that needs to be noted, not so much the system. I guess that's the best way I can handle that. I point out these engulfing candles only because it's a price action. It's a technical analysis tool. It's a pretty basic tool for candlestick charting, but it's not really. I wouldn't say it's part of the Hawkeye system to focus on. I wouldn't put a lot of energy thinking about that. But what is important is where the wicks and trend lines are, because that's really what we're doing. Is we're finding out where the higher time frame trends are and where the lower time frame trends are, to find out where the breaks are. We're trying to get the closest break to the bounces as we can. So right now, I mean, in fact, this thing's sort of consolidating right in this area, right off of this trend line. If we can break out of this consolidation zone, which is probably what you're looking at it here, you're probably looking at this area right in here. If we can get a break outside of this, it's probably going to head on up to here. But right now, it's still tracking inside this area, which is that's still 20 pips. I mean, there's still room to be taking trades in here, but you have to be, you want to be in the upper part and the lower part of the box. You don't want to be looking. I don't really like breakout trades. I haven't had a lot of success with breakout trades. And that's one reason I like the wedges. But part of the problem with the early on when we were drilling these wedges, we're actually looking for a breakout trade. But we're looking for a breakout to an area, but we want the room where the breakout is. It's trending in the area. But I want that breakout to be where I have room to a target to the bigger box. And that's one reason I started taking these intermediate trades, because what was happening early on, like even a couple of weeks ago, we draw the trend line. Well, if we were drawing, depending on how you drew it, we would be getting the break just enough for it to get kind of like what it did here today. Just enough to get your 2 or 3 pips, get in the trade, get a couple pips, and then reverses back to the other side of the wedge. So I'm more inclined to think, where's that secondary? So if it does break the bottom one, I still made some pips before I get there. If it breaks, great, now you got a really nice trade. If it doesn't, look at this for the bounce from here to this area. But you have to get to the higher time frames to make that happen. And we're looking at the lower time frames to find out those areas where it consolidates to take that trade. And that's been the whole reason why I've kind of started showing these secondary wedges, to be able to show those areas where it has the price action, where you get this nice move down at basis. And basically the wedge, these wedge alerts are basically showing the basing areas after a big move.
So this is from Beach Panda. So these drawn zones are the Mittman version of the new Ichimoku. Laugh out loud, we'll just call it the Mittman.
Let's just say that these wedges are, I mean, since AIRIS came out, I never really looked at wedges much before AIRIS came out, but I just started figuring out what will work for me into trying to get that 5 to 7 pip range that we're doing. And so, yeah, I guess you could say this is the Mittman version. I guess you could say that, or the Hawkeye, or call it the Hawkeye version. But as we get more used to using these wedges, I think it's what I do is I try to make modifications or adapt to the market as we go along. It's still the same basic thing. Wait for it to break the wedge, and now the question is, where do you want to try and get in to get your target? How do you want to draw the wedge? I mean, if you have the alert, let's just clear this all out here. You have the alert, and you have the 15 minutes. So you could say, well, we had the alert at, what time was that alert there, Christine?
8:15.
8:15. So you have a couple choices. I mean, you could go to a 1 hour chart and say, okay, well, where is it? Can't really find it. Go to a 15-minute chart and say, okay, where do we have? Because basically, I'm looking in the scheme of things, a wedge is a low, a high, a higher low, and higher high. So any place you find that scenario, you can start that, in my mind. That's pretty much basic here. So here's the alert. Here's the low. Here's the high. Here's a lower high. Here's a higher low. You can draw it. And so this is a higher low. This is still from the A. This is still a higher low. And from where the wedge alert, this is still a higher low. You can draw that. And then come back up here to, that's still a higher low. This is still this is still a lower high where the D is. And this was still a lower high. This was still a lower high. This was still a lower high. Draw the D there. But now you've got, now you've got the alert, but you're running out of triangle here before you got the break. Come to a 5-minute chart. Same thing. And the question is how, so like, this was right here. So that's, again, you're looking for the lower high before the alert. Now you did have this movement in here, but when it came down where the alert was, it still made a lower high. Same thing here. This was still a lower high. Came out lower or higher low, higher low, higher low. This was still a higher low, and then but now we have these wicks. I don't like crossing the wicks. So we have two choices. One, if you don't want to cross the wicks, you got to move this thing over here. Or if you don't want to cross the wicks, you have to move this one down here. But now we're down on a 5-minute chart. And so, I mean, that's getting all the way down to, then you go to 1-minute chart. Same wedge alert, same scenario. But now as you get to these lower time frames, you still need to find out where was my last low to make it. Is there enough room for the break and close? Because you still, the basic theory is you want it to close below the wedge. Well, what happens is that when you get the close below the wedge, a lot of times, depending on what time frame you are, all it's going to do is whipsaw you. Here's the close below, here's the test. But once you got the test and you get back in again, how many pips are you able to get? Well, here's your break. You got the close. Best case scenario, you take the pullback up to here. That's 2 pips. Best case scenario is you get from here to here. You got 5 pips minus your spreads. You basically just barely got out of it. That's why I draw these bigger, little higher time frame wedges, because it just gives you a little bit more validation of where the alert was. But this will be like the secondary. Now the thing is, then I'm looking to see, well, if this was worked, where is the previous high, where is the previous low to this point? And it's all the way over here. And that's why I start my wedges on these higher time frames, where I'm looking for the alert to be inside of a pivot high and a pivot low, and then just work my way down until I can get it to where it makes sense, we get the break. But when you get that, if you do this higher time frame, you're going to get by the time you get that's why I like these secondary wedges, because oftentimes what happens is you get these really strong moves where you get very close into the alert, it's just going straight down. Well, by that time, it's already, you can't get into it. So you need something to get you in to have your target. But you still need to have enough room to the lower part, to the higher time frame section, to be able to make it worthwhile taking the trade. Long answer for a short question.
All right, I'm gonna have to go, you guys.
All right, Ruben.
Have a good day, Ruben.
Thanks, you too. See you
Thank you.
guys
All right,
tomorrow.
my friend. Have a great day.
Oh no, actually tomorrow I won't make the session. I almost forgot.
That's not
I will
allowed.
see you guys on Monday.
Okay,
That's
have a good
acceptable.
weekend, Ruben.
Have a good
Take
weekend. Thanks. Bye.
Thanks for all your help.
Later, man.
Beach Panda, did that answer your question,
Yes.
or is it just more confusing?
He said, great answer. That's why we're here.
Okay, good. My goal is not to confuse people, and my goal is not to change horses in the middle of the stream, so to speak. But on the same token, as I see that, I'm trying to maintain the basics of what the Hawkeye system is. But sometimes you just have to be able to be a little bit nimble and a little bit flexible into how what your criteria are going to be. And the market changes. Market changes. I mean, this used to be a great pair to trade, and we could do the basic system and it would work. But when you find out where you're starting to trade something that works and you find out it's not working anymore, you have to look and see, well, why is it not working? What is it about this pair that's not working where other pairs may be? Either one, you just stay away from the pair, or you try and figure out what's different about it. And then you can see how that can apply to other pairs as well. I think markets are dynamic. They change, they change, times change, the markets change, the economy and the world economies are changing, especially with the currencies. That all plays a different. I mean, the U.S. dollar has been all over the place here, but it's been tradable. There are times where the euro U.S. I can't trade it because if you keep one system firm all the time, it works until it doesn't, and when it doesn't work, you figure out why doesn't it work and try and get it working again. But you don't want to throw the baby out with the bathwater and say, well, I'm just going to go to a whole new system. You're just going to see how you can maneuver the system that you have to where, what is it telling me now that I wasn't needing to be told before? And that's why I'm going to these little higher time frame zones, is because when it starts wicking you out, just wait till it gets to these other higher time frame levels, and then look for that wedge, look for all the criteria, but rather than taking it in the middle of an area, wait for it to give you the same factors, the same things of the basic system, but just pick a different area where you're going to be accepting it. And that's why, because for the most of the time, if you really look at charts in general, turn all this stuff off. If you look at the charts in general, it's basically going sideways. If you had a nice move down on this from a daily standpoint, the Swiss moves. I mean, this was a nice trade, but once it got down here, here's where all these wicks are. Now it's going sideways. So basically, this is our new area that we have to be paying attention to, because it's consolidating in a daily range, but it's been doing this for the last, since July 30th to now, July, August, September, for almost 2 months. It's basically been going sideways in a area that just keeps on. So let's try and find out what is about this area that we can do to identify how to play this thing. And we're saying, okay, well, if we're looking at it, I want to see it come up to, let me get this in here. So from a daily standpoint, From a daily standpoint, here's our trend. Here's a high, here's a lower high. From here, now here's the low. And we're seeing, okay, here it made a lower low, lower low, lower low. Now it's making a higher low as it's approaching here. So that tells me that now the range that we're trading in is here, from here to here. This is the area, and this keeps getting shorter and shorter until it gets to the end. And then once it gets to the end of here, it's probably going to break out and maybe come up and retest this. But right now, we've been looking at, for almost 2 months, it's been trading inside this area right now. As this thing was going, here was a low, lower low, lower low. So right now it's been trading in this channel, and it's bouncing off between here and here. But now you can see where, as this made from this low to here, and it's now going up to retest this. It only went down. If you do a measurement tool on this from here to here, you can see it came right down to this 20. This was a 76% retracement off of this area, and it was rejected. Now it's coming up to retest this area. So you see it's starting to, the range is getting narrower and narrower and narrower. It's making higher lows, it's making lower highs. So we want to pay attention to that. and go to a 4-hour chart. Let me take this one off here because it's starting to get cluttered here. Go to a 4-hour chart and you're seeing the same thing. Well, this was the daily range, this was the daily channel, but now it's still, and you can, and this is where these, if we talked about pitchforks before, this is where pitchforks come in. You start seeing where these are tines of a pitchfork and it's trading inside this channel. But if you can look and see, well, oh, and the wedge again is nothing more than trend lines. So if you take, okay, here's the low, here's the high, here's a higher low. It was holding this level right here. So take it here. Now this is the range retained on a 4-hour chart. But you can see it's getting harder and harder to make your pips because this range is starting to get smaller and smaller. And that's why I'm going these higher time frames to find out where are these levels. As it's always going sideways and it's always trending. It's just a question of which time frame you're looking at. From a daily time frame, it's in a channel going sideways with a slight decline. But on a lower time frame, the 4-hour, it's trending up. It's trending down. It's going sideways. It breaks up, hits a. So right now, this is the playground right in here that we're looking at. So I can make this. Let's see. Let me go. Let me make this orange. So here's a style. And let me see. Where's this? I want this purple. I'm going to make this one the purple one. So we're using our purple line. So let me just save this one. Let me just get rid of all this from a. Now we know that they're here now, but we don't need to be looking at it because we're only looking for 7 pips. So I'm going to take this one off. I'm going to take this one off. And here's our higher time frame wedge. And now we go to our 15-minute chart. We're still within that higher time frame wedge. Let's just tweak it up here to the top here. Now the thing is, we have 2 choices. We could say, well, when it gets down to here, I'm going to take it long. When it goes up here, I'm going to take it short. What about all the stuff in between? Now we could just say, okay, I'm just going to wait. This is 70 pips. We're only trying to get 7 pips out of this thing. But right now, where in here do you want to get in? Well, let's try that. We have a wedge alert. Let's go to our 15-minute. We're at 15-minute. It was at 7:30 or 8:30, I guess it was. 8:30. 8:15. So here's our wedge alert. But you see, we're in the middle of this whole range. So which way is it going to go? We really don't know. The only thing we can do is we can say, well, if we have a trend going here, maybe this is going to be the ultimate target, but when are you going to get into it? Are you going to wait till it gets up here and then go for it? You could, if you want to wait that long. But if we're seeing that here's a high, here's a low, here's a lower high, here's a higher low, here's our wedge. So we have the wedge alert on a 15-minute chart. Here's our alert, tuck it in, make this a different color so we can see what we're doing. Now the question is, okay, we drew the wedge, we're already at the apex, here's where it's breaking out. Which way is it going to break? Well, it broke to the downside first, but okay, it breaks down. Well, is it going down here? If it continues, it probably will. But you have some other areas you have to be looking at. You have a wick right here. Strong move up, big candles up. Here's where it came up to. Where did the move for this move here? Where did it originate? It originated right down here. So you look and say, okay, if that means that there were buyers down here. So we're going to say that here's where the buyers were. So here's where there was demand. And here's where the sellers came in. Here's where there's supply. They take the wick, high wick came in. We had blue candles coming up. It broke it, came up, retested right here. Here's our supply zone. And so we go to the supply zone. Okay, so we know we have supply up here because this is where this move came down. We know we have demand because this is where this origin. We're still in the middle of this whole range. What are you going to do with this? your best bet is to just ignore it until it gets up here. Take it short, or take it when it comes down here. Give me a wedge down here to say take it long. Right now, it's a crapshoot. Is it going to break up for 7 pips or going to break down for 7 pips? And you can see where, oh, it broke the wedge, but it couldn't take this out. Oh, it broke the wedge, but it couldn't take this out. So right now, this is the new playground. Our A and our B. So somewhere in here, when it breaks in this area, that's why I said I want to see it close below the A or close below the C, because then it's making new lows, or from here it's making new highs. But if it breaks here with the close above, is there enough room to get your 7 pips so it gets to the supply zone? And that's really where it boils down to from the alert. Do you have room? Yeah, we have room. We have 7 pips. We've got 13 pips to get up here. Not a bad place. If it breaks here, if it breaks the bottom, it breaks the A and closes below, do we have room to get down to here? 18 pips. Yep, we got our 7 pips. So what we're looking for is where from the moves up are we going to find a problem? If you look over here from this is the history, over here it found the buyers. Well, if it found the buyers over here, it stands to reason you may find some more buyers over here. And if you do, this is where it's probably going to bounce. And it came back down, broke. Now, do you have 7 pips till we get to where the buyers were? If this breaks, you come over here, there's no wicks. Here's where the next buyers are coming in, right there, on a 15-minute chart. If I go to a 5-minute chart and move over here, well, here is the wick. Here's where the buyers came in. You could actually take this thing a little bit lower. I like to try and keep things consistent on whatever time frame I'm using. So if I'm going to trade off a 5-minute, then I'd be looking for the buyers coming down into this area. So now if you look at this, you have to break. This is the first area you're going to have a problem. But if this can break, here's the next level, because there are no wicks. From this level here, you come to this big handle, you don't see any wicks over here. Here's where the buyers came in before it came up. It pulled up, came up, tested it. But from here to here, you see no wicks at all. That's why I'm saying that when it breaks this level here, it's coming down to here. Because there's where the last buyers came in. And they came in right over off of this red wick. If this breaks, come over here a little bit lower, and you'll see this is where the higher time frame C was. So if this, but you got a bunch of buyers in here, and if this breaks, it's probably going to come and test this and go on and so forth and so on. But we're only looking, but that's why I'm trying to determine that where's our playground. And right now we're trying to take trades inside a bigger move, and we're right in the middle of this whole move right here. And it's basing going sideways, but it's giving us some trade opportunities in this region. That's what I'm saying. I want to see it close above here. I want to see it close below, well, in this case, it's close below the A. But if it closes the A, here's where the buyers came in again, right over here. And you watch when this thing comes down, let's watch it. Let's see what happens. 5-minute chart come down. I would be willing to bet you're going to see a bounce off of this point because of this all the way over here. This is where they came back in again. Now, if there aren't any more buyers down here, then it's going to come down here because these buyers may all be gone. This may have been the big guys are down here. They drove it up, and they got some people in over here. They got people sucked in over here, came back in. They came in here. They say, oh, it's going higher. They buy. They put their stop down here. Guess what happens? They find the stops. If they buy here, they're selling here. Well, if they're selling here, who are they buying to? They're buying to the big guys. And then the big guys will say, okay, I bought here. I'll buy here again. My average is right here. Now I'm going to run it on up. And now guess what? These guys are now selling. And who are they selling to? They're selling to the people that think it's going to break out. The trap. They sell to here. People buy. Oh, my stop's going to be down here. Well, guess what happened? Come down here. Their buy is now sold. They just closed out their position. And guess what happens? There it goes again. And on it goes. But right now, we are playing in this range right in here.
You have a couple of comments, Al.
Yep.
From Beach Panda, Al. That is so my life mantra. I don't try to break the system, just push the limits and understand that I need to be nimble enough to organically change to accommodate real life, or in this case, fintech computer programmers. And Pedro had said, in my opinion, this trade is a risky trade unless you wait.
Yeah. Yeah. I mean, right now, do we have a range between the B and the A? Now we did get the, now here's, let's put, I said, remember, we have, this is where all the buyers came in. Here's where our A was. So basically this thing came down and it got rejected. Why? Because there's still some buyers down in here. So I would say right now, if this thing comes down, if you got the break, which, I mean, right now, if you were to draw a, let's just take this one down here, and we have a, again, there's nothing saying we can't move this, but you can see this is A and B, okay? So this B is still holding, the D is still holding. This is still lower than there's nothing saying that you can't take this one over here to move this wedge out a little bit further. Give us some more room. This is still holding. Now this got broken. So the C got broken, you got the close. The A, if you look and see where my A is, you can see where I don't have a close until, right now all these candles over here are closing right at where the low of the A is making some new lows, but it's still respecting this area right here. Now, in all honesty, I would say that from a moving average standpoint, or as for some other factors that we use to determine which direction to take the trade, where's our RCS tool? Our RCS tool is saying Swiss is still strong to the downside on the 1 minute, or on the 5 minute. Let's see where it is on the, right now they're just about, we got a 3 and a 1, so not a lot of strength to the downside anymore. I'd be more inclined, until we break out of these yellow lines, I'd be more apt to take this thing long right down here. When I get the moving averages to cross here, we're still within our yellow zones. If I get across here, do I have room to here? Because this is where it's probably going to bounce again. Let's measure it out. Get a close above the 14 pips. You could, if you get a close above this white line, you have 14 pips to get to about another 9 or 10 pips to the upside. I'd be more apt to take this trade long if I get a close above, get these moving averages to cross. But by the time they cross, from here to here, let's look at this. 1 minute chart. We're just about, no, still, yeah, we're just about out of time here. We have 1 minute chart. By the time we get all the moving averages to cross here, it still didn't even reach up. It still didn't even reach. So it's still trading inside this area. And there's not enough room by the time these moving averages cross. You had the top, well, basically you still made lower highs. Now it was still a target, but again, the target didn't materialize. You got the break. This was your target, 12 pips. But guess what? It went only about halfway up there. It went up 3, and then it broke down again. So that's why you're better off just waiting until it gets up to this area, or waiting until it gets down to this area. And it's down to this area right now. Now, if you get the crossover, are we getting lower lows? Here's a low, lower low. And so if you're looking at this, if you look at this whole picture here, from this low to this low, it made a new high, made a new low. So now this whole range is changing. Again, you're in the middle of the bigger move and you don't know where you're at. Get the breakdown here and then let's shoot for this, because we know that from this yellow to here, it's clear. It's a clear shot. So now if I get a break and close below this one, then I say, and this is what this thing does a lot, is about this time of day, it gives us back and forth, and about 10 o'clock, it goes to breaks, and it gives it, that's the move for the day.
Well, you just had another alert.
Well, and we're going to have to shut this thing down because it's now 10 o'clock and somebody's going to probably need the room. So hope you got something out of that today. And
Of course.
we'll be around tomorrow, same time, same place. And we'll see you then.
See you tomorrow.
everyone.
Thanks,
Bye,
Al.
everyone.
Absolutely, and we'll look forward to having some really good trades.
Mm-hmm. Yep. Thanks,
Okay.
Matt.
Thanks, Matt. And we'll talk to everybody later.
Have a good day, Al.
And Christine, you know where I'm going to be.
Yes, okay. I'll be there.